right, let's play the game here today, guys. Obviously, we've been doing this for the last month or so. Greg's been joining us on Thursdays, and he brings 3 different companies to our analysis for the show. He breaks them down fundamentally, talks about dividends, whatever's grabbing his attention. Then the coaches on the panel get to decide which one they will buy, which one they will hold, and which one they will dump or get rid of. Greg, you're up, man. What you got?
Well,
by the way, before you move on from BRK.A, I just want you to look at the numbers that Buffett post in EPS.
Oh, it's bananas.
That's Buffett.
What? I can't see the exact detail. What was that last earnings report, Tyler?
The last one was 7,638 from an EPS perspective. Per share.
Per share.
Per share.
Per share. All right, Greg, you're up, man. What you got?
All right, so I flipped the coin today. I looked at metals and mining. I looked at specialty chemicals, and I picked out a bunch of candidates in either one. But I thought since gold's having such a wild day today and doing its little popping thing there, that we'll stick with metals and mining today. So the stocks we're going to look at today still got some fundamental strength to them. We're going to mix in a little bit of a stronger component, a growth component with these things. And the thing I want to look at today is value, overall value. So we're not only going to look at the fundamental side of this, but we're going to look at the PE ratios as well. So that'll also be a kind of a determining factor for you, whether you like the company or not so much. So let's start out with Nucor. NEU there. So Nucor, obviously going to the moon. I'll just read you guys out the numbers fundamentally speaking. So basically we've got about a 1.75% dividend. We got a payout ratio of about 68%, 11 years of consecutive dividend increases, which is decent. Started paying dividends in 1973, and their PE ratio is a 39. So for those who are not experienced with PE ratios, price to earnings, are a way to compare companies that are similar in nature. So a PE ratio, basically you're paying $39 for every $1 in earnings, is essentially how this breaks down. So, where
are you getting that number from, Greg, on the PE ratio?
Dividendinvestor.com. So I'm just using their numbers.
I think that's off after their latest earnings report.
Okay, it might be. I'm just going by the data that I got.
The forward PE ratio is I believe 20. So yeah, I mean, it's perfectly fine. But given their recent run up just in the last 2 weeks, it actually brought that PE ratio quite a bit up. I'm not too concerned about it. It's 89 right now.
Okay.
But again, it's just over the last week and based on the previous earnings, the forward PE ratio is fine. I'm not that concerned with valuation. I just wanted to bring that point up.
Okay. Thanks, Matt. Yeah. So I'm just, like I said, I'm just using the numbers that I got from where I get them from. And so, basically, regardless of what it is, what we're going to do here today, is you're going to be able to compare, if you've got a PE ratio of 100 versus a PE ratio of 10, it means two very different things. And again, it's just that value comparison. So that's kind of why I wanted to bring it into the mix this time, because you can look at something fundamentally, but what we're looking at here at the metals is we're looking also, they've got more of a growth component to them than per se some of the other stocks that we've looked at in recent vintage. So I think that has a lot to do with it. And PE ratio is something that you can do, like I said, to kind of compare value. What are you paying for what are you getting, kind of break down that way. So that's Nucor. Those numbers, looking at it technically speaking, really not much to say other than huge breakout, massive run. Doesn't really look like the momentum slowing all that much as well. Pretty decent ride on Nucor here right now. Mm-hmm. Okay, so that's number one. Next up, we got Steel Dynamics, STLD. So Steel Dynamics
are so awesome.
Yeah, the charts are pretty, aren't they?
Yeah.
So again, high base breakouts, nice 4-day run there. Numbers wise, what we're looking at here, Steel Dynamics we're looking at about a 1.73% dividend, so very, very much the same. Dividend payout ratio only 27%, so a lot of room for increases there if need be. 10 years of consecutive dividend increases for Steel Dynamics, and their first dividend was paid in 2004. Now their PE ratio is a 16 according to the data I have. I don't know what the exact up-to-date one is, but 16.
I got 16 too, Greg.
I got 16 as well. Yeah.
Okay, good. So they're ballpark. So they're 16 there. Solid, pretty solid dividend payer. Only an issue kind of 2009, 2010 there. Otherwise, they would have had a nice long history. So again, just looking at this, you've got a very similar chart, a bit of a lower price there. Some real good numbers there overall.
Okay.
And thirdly, we got our friends at I just lost here. Newmont Mining, NEM. So NEM, not exactly the prettiest chart. Past earnings, but sitting there at a breakout level. Kind of more of a neutral type stock here. Very similar price point to Steel Dynamics. Their numbers shake out as such. Let's see here. So we're at about 2.7% dividend, so a bit higher. Dividend payout ratio 45%, so not bad there. 0 years of consecutive dividend increases, and they've got they started paying dividends in 1934, so a bit of a longer history. Their PE ratio right now is around 20.
Okay.
Yeah.
You
So
want me to
buy
go
one,
first?
hold
You
one,
want to go
dump
first?
Hold on. I thought Greg had a final thought there, but Greg, you done? You good?
Yeah, nope, yep.
This is
those
a
are the
tough
numbers.
one. Yeah, I want Matt to go first. Obviously, for in my head, I know exactly why I want you to go first because a couple of these stocks are on a few lists. Matt, you've done a lot of research into them. We got
It's simple for me.
Newmont.
It's really simple for me. In fact, Tim, let's play a little game of locked in. Let's see if you can nail me down.
The tough one is which one to buy.
This one was extremely simple for me.
I think I got you. I think I got you pegged. I really do.
All right.
I'm locked in on what Matt will say.
Let's first start with dump.
Hang on.
Uh-huh.
I'm locked in on what Tim is locked in on what Matt will say.
I love this. I love this.
Right. Okay. So you would, out of these three, you would dump Nucor.
That is accurate.
Okay. And a couple of different reasons. Number one, Steel Dynamics just has better valuation.
It's
Nucor's
not
had a huge
as good
run-up.
as Steel Dynamics.
It's just not as good as the other
And
company.
it was not as good as Steel Dynamics when we put Steel Dynamics onto the Tackle 25 last year or coming into 2021. Steel Dynamics had better valuation. It still has better valuation. Steel Dynamics to me is the better of the two companies, right? So I would dump Nucor. Now, Nucor, that's not a negative on Nucor.
Not at all. Look
Nucor
at that chart.
is a very good company as well. And when we were breaking down those steel companies, I wanted a steel company on the Tackle 25 very badly. Anybody who's been around Tackle 25 for years knows how much I believe in the steel companies and infrastructure in general. So I wanted steel to be represented on our list this year. And so we broke down these steel companies. I mean, Tim, you and I spent a lot of time breaking down these steel companies, and it was close, but Steel Dynamics just was a little bit better in fundamental metrics than Nucor was. And so to me, it's dumping Nucor is not a negative on Nucor. It's just you don't need two steel companies. And so for me, it's Nucor's a dump. Now the question, Tim, is
this is where it gets
the
tricky.
hold or the buy?
This is the tricky one. I think you're going to say that Steel Dynamics is the hold just because of price appreciation and being overstretched in the short term. And I believe you'll say that Newmont Mining is the buy because of the action we've seen in gold developing here recently with the breakout at 1800. Did I nail not locked in? I got it.
You nailed me.
Ding, 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 ding. Drop the mic here, people.
Steel Dynamics.
I nailed it too, guys.
Yeah,
I
Tyler nailed it too. Everybody nailed it. Everybody gets a blue ribbon and a gold star. Okay. So, but to me, it's pretty simple. You got to make a decision between Steel Dynamics and Nucor in this case study. And to me, once again, Steel Dynamics is just a little bit better of a company than Nucor is. Not a knock on Nucor. Nucor has been a Tackle 25 stock in the past. Steel Dynamics, we just kind of felt like was in a better fundamental position than Nucor was. And so Steel Dynamics, because of the price appreciation, you're not looking to acquire at the top of the charts, in my opinion. You're looking to hold because you believe in the movement, you believe in the trend, you believe in the fundamentals. There's nothing in those fundamentals that says get out of Steel Dynamics. Yeah, you're in a swing trade maybe, but Steel Dynamics for the Tackle 25 is not a swing trade. It's a position, it's an investment, it's a cash flow system. And so for Steel Dynamics, you're not going to micromanage simply because you're at the top end of the chart. You're in a management position there. You're in a hold position there. And with the analysis on gold and what I said earlier today, that you're still not too late, you look at Newmont Mining for a second. And obviously a negative response to earnings brought down this entire space. But when you're talking about the leadership of the mining community, you're really only talking about two stocks. Yeah, you have your mid-level companies, your micro-level companies that certainly can see some love every now and then, but you're really talking about Barrick Gold and you're talking about Newmont Mining. You're talking about GOLD, which is the one we have really kind of love, and that's the one that's on the Tackle 25. But Newmont Mining has been the front runner here. It's been the better position over the course of the last year. Newmont Mining has been front running this gold analysis. And outside of a little bit of a negative reaction to what I took as a fairly decent report out of Newmont Mining, the good price recovery off of that has been very impressive. And now you're threatening a potential breakout. So to me, Newmont Mining is simply in a better position where you would be looking to acquire versus Steel Dynamics, which is not in the, oh, I'm looking to acquire, you're looking in to manage.
Mm-hmm. Mm-hmm. I love the analysis, and Greg, I love the three stocks you brought here today. I thought it was a really good.
Oh, does that mean you guys don't have to go?
I just agree, brother.
I
just listen.
I'm going to chime in when you're done there, Tim.
Well, Tyler, anything you want to throw in?
No, this one was hard. Matt knows the fundamentals of these companies better. I do agree. I think the logic is sound. I wouldn't disagree with any of that.
Yeah, Greg, what about you?
So for me, it comes down to, the reason I threw in the PE ratio this time around is because I wanted just another metric to kind of compare here, other than just kind of the way that I normally do it. And so for me, when you look at Nucor and you're getting a 1.75% dividend, approximately the same amount of history, as Steel Dynamics, and then you look at the prices, you look at the PE ratio, even if the 39 is, a little bit incorrect, it's still considerably higher than Steel Dynamics.
Mm-hmm.
So just from a value standpoint, Steel Dynamics is the better way to go. Then you look at your Newmont Mining. It hasn't taken off yet, which I think it's going to get a boost from the increase in gold prices. So you've still got an opportunity there. Plus the dividend for a guy like myself, the dividend, for a fundamentally sound company, it's paying a 1% more than those other two. So the way I break it down is Nucor gets dumped because, if you take the metrics that we kind of took apart today, they're pretty much side by each, only the PE ratio is considerably higher for Nucor. So that leads me to want to buy, Steel Dynamics as opposed to Nucor. And then for holding, I want to continue to have some growth potential here, plus collect a bigger dividend. And that's why I would end up holding Newmont.
Yeah.
Well, and one positive on both Nucor and Steel Dynamics, it wouldn't be a separation, but just to understand kind of the P ratio and valuation. When you're looking at the last year, and let's take a look at Steel Dynamics very quickly. When you're looking at the last year of earnings and you're still rocking at a 16 P ratio, and that is not vastly different than what it was last year, by the way. Steel Dynamics has not had like a P ratio go from 16 to 48 back down to 10. No, it's been fairly consistent. And one of the reasons it is fairly consistent is look at their growth on EPS over the last 4 quarters, 47 cents, 51 cents, 97 cents, 2.1. You're seeing impressive growth as this trend has developed, which has kept that PE ratio from a valuation perspective in line. Now, if we were to see this same type of thing, but now we're looking at Peloton or we're looking at some of those growth areas of the market, You don't see that. You see price go up, very similar to what you're seeing in Steel Dynamics, but you don't see the growth trend. You see a recovery trend, and that's a vastly different fundamental analysis, in my opinion. Steel Dynamics, like I have, even with this price discovery that Steel Dynamics and Nucor and Steel in general has had, I don't have valuation concerns. And honestly, I don't have valuation concerns on Nucor. But Greg, you make a wonderful point when you're breaking down two fairly equal, like Tyler, you don't know much about the fundamental nature of steel companies the same way like Greg or myself would, right? We spend a lot of time breaking down the fundamentals of these areas of the market. But when you're looking at it from a technical perspective, which you put a lot of emphasis on, there isn't a substantial difference, right?
No.
You're looking at a very similar thing. You know, it's the rising tide theory. The rising tide raises all the boats, all the ships, right? But again, when you're looking at it from a fundamental perspective, you can kind of understand where the strength really is. And again, I'm splitting hairs on Nucor and Steel Dynamics, but I do believe Steel Dynamics is the better fundamental position. Nucor has a very similar EPS trend though, 36, 63, 1.3, 3.1. You're seeing the growth justify the price, which means trends should continue into the future.